the gold demand surge?
The reason why gold demand is surging is for all the traditional reasons, is that gold is a store of wealth. And it's been a store of wealth for over 6,000 years of recorded history. But gold is also a unique financial asset in that when you buy gold bullion, it has no counterparty risk. You don't rely on any third party for your gold to store your wealth. Every other financial asset has what we call counterparty risk. And this is why investors are turning to gold, because they are starting to get worried about their bank deposits, because they're scared the banks will not be solvent. They're starting to get worried about their stock portfolio, because they are scared the companies they've invested in are not going to stay in business. And they are concerned about their bond portfolio because they're scared that governments will default on sovereign debt. Gold eliminates all of these counterparty risks, and this is the issue that is now driving investors towards gold.
What about people that possibly do not have portfolios? They have a little bit of savings in the bank. Should those people take their money out of the bank and buy gold?
Yes, they should. Gold and silver will go to astronomical numbers as fiat currencies are inflated to very little purchasing power. The US government is announcing almost on a daily basis how many more trillions of dollars they're going to put into the system, and this is money that's created out of nothing. It has no backing, and this will eventually lead to hyperinflation and will reduce the purchasing power of fiat currencies. So how can you protect yourself? Well, by taking that money out of the bank and buying gold from a broker, and you must own physical gold. There are a lot of gold substitutes out there which are paper promises for gold, and they won't protect you. You need to have either allocated gold or gold in your hot, sweaty hands that you own yourself.
Tangibly holding it and having it in your home?
Yes. In the interim, while gold prices go very high, people will be able to cash in their gold for fiat currency as and when they need it.
You are the director of the Gold Antitrust Action Committee, and from what I read, GATA has been blowing the whistle on the suppression of the gold market for over 10 years. What does that mean, that there was a suppression of a gold market in the U.S. for over a decade?
This was what led to GATA being formed in the first place. In 1999, we recognized that there was a total mismatch between the demand for gold and its price performance. And we've amassed a lot of evidence over the years that have shown that the gold market has been suppressed. And this suppression is an effort to maintain the value of the US dollar and also to keep interest rates low. The whole mechanism for this has been described in a paper by Lawrence Summers, who was an ex-Treasury Secretary, but when he was the professor of economics at Harvard University, he wrote a paper called The Gibson Paradox and the Gold Standard. In that research, he explains how in a freely traded gold market, the real interest rates and the gold price should move in inverse relationship to each other. In other words, if real interest rates are low, the gold price should be high, and vice versa. What we've seen through the 90s and most of this decade is that we've had a low gold price and low interest rates. So the inference from Lawrence Summers' own work is that the gold market is not freely traded, and it's been suppressed.
Lawrence Summers is part of President Obama's cabinet.
Yes, he is one of President Obama's economic advisors, and so we can surmise that the suppression of the gold price is ongoing and alive and well.
You have referred to this as basically a Ponzi scheme.
Yes, the Western central banks, but with the ringleader as the Federal Reserve and the US government, have instigated this scheme of suppressing the gold price. And this is what is at the core of Robert Rubin's strong dollar policy, that if you can suppress the gold price and not make it a free market, then you can have low interest rates and a low gold price. And the low gold price essentially switches off the fire alarm in the financial system. What was the purpose of the strong dollar? Well, it was so that the US government could issue lots of dollars without the alarm bells going off. The benefit for the US has been to live beyond their means. They've managed to import goods from foreign countries, and they have paid for them essentially with overvalued treasury debt. And they have even been so successful they've convinced other central banks that US treasury debt is a reserve asset. Now central banks around the world are sitting on trillions of dollars of treasury debt as a reserve asset, which has the huge counterparty risk now of the American government. They will not repay it.
So we've been inflating the dollar, inflating the dollar, inflating the dollar like a balloon. Is this balloon going to pop?
Yes. The suppression of the gold price is coming to an end. The gold price has already risen from a low of $255 in 2001 to a high recently of $1,000. And this is a sign that the scheme is starting to lose traction, because it depends on central banks being able to continue to put extra supply of gold into the market to keep the price down. The central banks have been doing this for 15 years and are now, on our estimates, probably consumed 50 to 60% of their gold reserves. At the same time, demand for gold by the general public is going up. There obviously is the breaking point coming where gold will skyrocket, and it will go to numbers which will probably surprise even the most bullish people.
In 2008, GATA took out a full-page ad in the Wall Street Journal warning of impending financial disaster due to the suppression of gold price. What was the response? What
GATA has had to say for 10 years has largely been ignored by the US press and, of course, government officials. And we got so frustrated with that, we took out this full-page ad in the Wall Street Journal. It cost $264,000. And warning the general public that if this manipulation of the gold price doesn't stop, then there would be significant catastrophe and disaster in the market. And we got no response. So the problem with the scheme is that it's in a lot of people's interests in the financial world and, of course, the media that's linked to the financial world for it to continue.
Do you credit one Russian government official as the first anywhere in the world to acknowledge your claims of gold manipulation?
Okay, this was Oleg Mizakov, who's the deputy chairman of the Russian Central Bank, who made a speech in 2004 to the London Bullion Market Association, their annual meeting. And in that speech, he mentioned that a group of economists had got together to form GATA, and we had expounded these theories that the gold price is manipulated, and that suppression is allowing the US a exorbitant privilege of being able to spend a lot more than it should be able to spend.
Mr. Douglas, you say the entire financial crisis that the US and world is living through right now has come about through derivatives. What are derivatives?
This is not understood by a lot of people and not mentioned in the press very much. But derivatives are essentially like an insurance contract. And you can take out an insurance contract against something happening. Well, because the system has been rigged, and many of the big money center banks and the large insurance companies like AIG have known that the system was rigged, they've been able to capitalize on it. So they have been able to sell trillions of dollars of derivative contracts to be able to get insurance premiums basically every month on those contracts and be very wealthy out of that, knowing that they would never have to pay out on the contract because the system was rigged. And this is where the problem has recently developed, was that the subprime mortgage created defaults in those derivatives, and that has created a daisy chain effect through the system that now these contracts are payable. So instantaneously, black holes of trillions of dollars have appeared in the balance sheets of many banks, and this is what's being referred to as toxic assets.
So instead of the stimulus plans that keep getting pushed out of Washington, what would you suggest needs to be done to save the U.S. economy?
First of all, we need to outlaw the OTC derivatives. Second thing we need to do is to abolish the Federal Reserve.